Hey guys, what's up? My name is Alex and welcome to another video. Right, for those that don't know me, I'm basically a part-time trader on a journey to become a full-time trader. And in this video, you'll be talking about the upcoming news for this trading week, right? So we're going to be looking at what exactly that news is, how it affects the market, and how we will be able to navigate through the market with this news in hand, right? So as I say in every single video, just take the meat, leave the bones, type of thing. You don't have to do or say, you don't have to do or execute every single thing that I say, right? This is just an opinion of mine, something I'm throwing out there for you guys to just digest and see whether it's good for you or not. And with that being said, let's dive into it, right? So we're gonna start off tomorrow at 8:45 a.m. Central Time. Again, this is Central Time. We're going to be starting off with the Flash Manufacturing PMI and Flash Services PMI report, right? So let's dive in. The Flash Manufacturing PMI, it's basically a report that measures the level of diffusion index based on surveyed purchasing managers in the manufacturing industry. So basically, it's a report where 40 manufacturing managers gather, right, and they talk about how the manufacturing industry has been performing, how many orders have come in, how much demand there is, stuff like that. And they take the manufacturing industry into account to determine the overall health of the US economy. It's a great indicator of economic health, right? As we see in this section right here, why traders care. The Flash Manufacturing PMI is a leading indicator of economic health. Businesses usually quickly react to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy, right? So how will this affect the market? Basically, if the actual is greater than the forecast, then it's going to be good for the currency, bad for the market. But if the forecast is higher than the actual, then it is good for the market, bad for the currency, right? For all my forex traders out there, it's bad for the currency. Okay. Now, let's go on to the Flash Services PMI, right? It's basically the same thing as the Flash Manufacturing PMI, but here it's focused on services. Okay, so it's the same thing, right? So I'm just gonna go into the usual effect, how this affects the market. So if the actual is greater than 55.7, then it is good for the currency, bad for the market. Excuse me. And if the actual is less than the forecasted, so if we get anything below 55.7, then it is good for the market, bad for the currency. Okay, good for the market, bad for the currency. Okay, so we have that. It's gonna be a pretty busy day tomorrow. A lot of people are gonna be looking into these reports, mostly companies, right? So because everything revolves around manufacturing in this economy. But anyways, let's move forward to Tuesday, right? Tuesday, we have two reports coming out as well at 7:30 a.m. Central Time. The first report is going to be the core sales, retail sales report month over month. So basically, what this measures, it's the change of the total value of sales at the retail level, excluding automobiles, right? So it measures the amount of sales we've had in comparison to the previous month at the retail level, but we're going to be excluding automobile sales here, right? So, and why do we care about this? It's basically a indicator of consumer spending, and consumer spending accounts for the majority of overall economic activity. So it's a very, very, very important report. And now, how does it differ than from the retail sales month over month? It's the same thing. I'll be honest with you. Just this one includes everything. Okay. So for both, let me just make sure that this is actually For both, if the if the actual is greater than the forecasted, it's good for the currency, bad for the market. But if the forecasted is greater than the actual for both reports, it's bad for the currency, but it's good for the market. Okay. Now we have that. So again, Tuesday will be a pretty busy day as well, right? It'll be a very busy day as well. Investors are definitely going to be looking at this. Traders are definitely going to be looking at this, right? But we're still able to trade through here because we still have the rest of the day, right? So on Monday and Tuesday, I'm going to be trading most likely after the reports are released, right? So yeah, and we could still make some bread there, but we had to be very cautious, right? Because this is based on a reaction, based on news. Okay, so Wednesday, December 18th. It's a pretty intense day, right? The reason why is because we have one, two, three, four high impact news events. Okay, so we have three of them at 1 p.m. Right, we're gonna start off with the federal funds rate. Now, you might ask me, Alex, why is this important? Right, because this is basically the Fed showing us how what the interest rate will be for depository institutions. So it's gonna show us the interest rate. Right, we're expecting a 4.5% interest rate. Anything above that will be horrible for the market, but anything below 4.5% will be good for the market, right? And why should we care about this? Again, it's because short-term interest rates are a great factor in the currency valuation, and traders will look at most other indicators merely to predict how rates will change in the future, right? And again, this goes for investors as well. So yes, we have that. That is going to be very, very important news. And then we have the FOMC economic projections statement and press conference. Do not trade during these three news statements or these three news events, right? Why? Because the economic projections will project inflation as well as economic growth for the next 2 years. And then it is also a tool that the Fed uses to communicate economic policies and monetary policies to investors. So investors will definitely react off that. Then we have the FOMC statement. What this is, again, like I mentioned in the previous statement, it's a tool that the FOMC uses to communicate with investors about monetary policy. It also shows the outcome of their vote on interest rates and other policy measures, right? Along with commentary about economic conditions influenced by their vote, right? So again, very important statement. And then the FOMC press conference, right? This is basically going to be held by the Federal Reserve Chair, Jerome Powell, and he'll be showing, he'll be talking, or he'll be discussing the projections, the interest rates, and the statement. And he will also be held taking questions, right? And it is during the questions part where the market usually moves. The reason why is because some questions might not be scripted and they may not be taken into consideration beforehand. So with that being said, if somebody comes out and asks a question that will definitely move markets, and based on Jerome Powell's response, market can be very volatile during that time. So I would recommend not trading at all, right? So I'm not trading on Wednesday, right? If you're new, I recommend not trading either, right? So Thursday, we're gonna have two reports at 7:30 in the morning Central Time. First one is going to be final GDP quarter over quarter. What this basically measures the annualized change in the inflation adjusted value of all goods and services produced by the economy. Okay, so if the actual is greater than the forecasted, it is good for the currency, bad for the market. But if the forecasted is greater than the actual, right, then it is good for the market, bad for the currency. Now, did I get to explain? I don't think I explained how these three will affect the market. I don't think I did. But anyways, let me explain it real quick before we move on to the unemployment claims. Right, so for the FOMC economic projections, if the projections are extremely hawkish, in other words, if it's like negative, right, then it will be bad for the market, obviously. But if it's less hawkish, less negative, more positive, it will be good for the market, right? Same thing goes for the FOMC statement and the FOMC press conference. But again, be very, very careful, because if the market goes up, with this man's, with Jerome Powell speaking, 1 second, and he says something else, market will drop right back down and you would lose everything, right? Because it's a game of probability, so if you don't have a probable setup, you're not going to make money. I'll be honest with you. And if you do post, it's going to be a fluke, But anyways, let's move forward to the unemployment claims, right? What are unemployment claims? It's basically shows us the amount of people that filed for unemployment insurance this week, right? So if the actual is less than the forecasted, it is good for the currency, bad for the market. But if the forecasted is greater than the actual, right? No, sorry, the forecasted less than the actual, then it would be good for the market, bad for the currency. Okay. So yeah, investors definitely look at that. And finally, on Friday, we will have another and final report at 7:30 a.m. It is basically gonna be the core PCE price index month over month. All right. So what this is, it measures the change in the price of goods and services purchased by consumers, excluding food and energy. Right. So why should we care about this? It basically shows, it's basically the Federal Reserve's primary inflation measure, and since inflation is important to the currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. So in other words, it'll show us how prices have gone up or gone down in the past month. You know what I mean? So again, this is another very important report because it shows us how inflation has affected us on a month-over-month basis, right? So I think I still need to speak about the effect, right? So if the actual is greater than the forecasted, then it is good for the currency, bad for the market. Give me 1 second, let me get this out of the way. But if the forecasted is greater than the actual, then that means it is bad for the currency, good for the market. Okay, so there's that. I think that's all for today, and hope you guys understood something. Hope you guys learned something from here, and I hope you guys have a good one. All right, I'll see you guys around.